With the U.S. markets now closed for the weekend, Tilray Brands, ticker TLRY, ended Friday's session on October 24, 2025, at $1.49 per share. It was a relatively quiet day, finishing up just 1 cent, or about 0.68%, on fairly heavy volume of nearly 49 million shares. The stock traded in a tight range between $1.48 and $1.53, ultimately unable to hold its intraday high. And for most casual observers, that price just looks like more of the same, a low-priced cannabis stock, treading water, stuck under $2, seemingly going nowhere. The expectation for years has been that this is a company entirely dependent on a binary event, U.S. federal legalization. Until that day comes, the narrative goes, this is just a cash-burning Canadian producer, a favorite punching bag for short sellers, and a source of endless frustration for a massive, dug-in retail investor base. That's the common belief. But that belief is now dangerously outdated. The reality of what's happening under the hood at Tilray is far more complex and, frankly, far more interesting than just a simple legalization or bust bet. The real story isn't the 1 cent move from yesterday. It's the market's frantic attempt to reprice this company after it did the one thing nobody thought was possible. It actually turned a profit. Let's rewind to October 9th, the day of their fiscal first quarter 2026 earnings. The consensus on the street was for another loss, somewhere around 4 cents per share. Instead, Tilray reported a surprise net income of $1.5 million. Now, that's not a huge number, it rounds to $0 per share, but for a company in this sector, hitting positive net income is like finding water in the desert. It changes the entire psychological profile of the stock. Revenue also beat expectations, coming in at over $209 million. The stock, as you'd expect, exploded, ripping from the $1.70 to a 52-week high of $2.32 that day. Since then, we've seen the predictable pullback as short-term traders took profits, bringing us back to this $1.49 level. But here is the critical distinction. The stock didn't collapse. It hasn't returned to the $1.15 levels we saw in late September. It's holding a new, higher base. The market is trying to figure out if that small profit was a fluke or the first sign of a genuine turnaround. The expectation was continuous losses. The reality was a black ink surprise, and the tension between those two is defining every single trade right now. This tension is most visible in the online investor communities. If you look at Reddit or X right now, the mood is a potent mix of vindication and extreme frustration. The long-term holders feel validated by the earnings report, proof that CEO Irwin Simon's controversial strategy of diversification is finally working. They're pointing to the craft beer division, the wellness products, and the European distribution network as the real business, while the cannabis side just waits for its legal moment. But the frustration is just as loud, and it's all aimed at the stock's price action despite the good news. The comment sections are filled with accusations of extreme manipulation and shorts fighting tooth and nail. This isn't just paranoia. There is data that feeds this narrative, and it's a huge part of the Tilray story. The expectation for retail is that good news should equal a higher price. But the reality they're seeing is a daily high-volume battle to keep the stock pinned under $1.50. Let's look at that data, because it's what thousands of retail traders are watching every minute. As of the most recent report, Tilray has about 104.7 million shares sold short, which is the significant 9.36% of the float. That's a high number, and it absolutely represents a major headwind and a source of constant selling pressure. But the data point that has online forums buzzing is the off-exchange short volume ratio. On Friday, a staggering 53.26% of the total volume was reported as short sales in off-exchange venues, or dark pools. On Wednesday, it was over 50% as well. To a retail investor, this looks like definitive proof that big money players are actively suppressing the price, routing sell orders away from the public lit exchanges to avoid triggering buying momentum. This creates a deep sense of injustice, a feeling that the game is rigged and that their fundamental good earnings thesis is being suffocated by algorithmic trading. This feeling was amplified by the fails to deliver data from late September. Just as the stock was beginning its massive run-up, the FTDs, instances where a party fails to deliver the shares on a transaction, spiked dramatically, hitting nearly 8 million shares on September 30th alone.
To the ape community, this is the ultimate smoking gun, a sign of potential naked short selling or other settlement failures. When you combine high short interest, massive dark pool shorting, and a history of FTD spikes, you get the perfect psychological setup for a squeeze narrative. This is why so many retail investors are holding on, believing that the fundamental turnaround, the earnings, combined with this technical pressure, the shorts, will eventually lead to a violent move upwards. The frustration is that it hasn't happened yet, and every day it stays at $1.49 feels like another day of crime to them. Now, let's step away from the crowd psychology and look at the business itself. The reality of Tilray is that it's no longer a pure-play cannabis company. Irwin Simon has been on a buying spree, funded by dilution that has angered long-term holders, to acquire a portfolio of U.S.-based federally legal assets. He bought Sweetwater Brewing, Montauk Brewing, Red Hook, and a host of other craft beer brands. He bought wellness brand Manitoba Harvest. The strategy is twofold. First, these businesses provide an immediate, stable, and growing revenue stream right now to offset the losses from the highly regulated and competitive Canadian cannabis market. The recent earnings prove this is working. The beverage alcohol segment is the ballast keeping the ship steady. Second, these brands create a massive nationwide distribution network across the United States. The expectation is that when federal legalization or rescheduling does happen, Tilray won't need to build a U.S. presence from scratch. It will simply plug in its THC-infused products, beverages, edibles, vapes, into the exact same distribution channels that are already legally shipping Sweetwater beer and Manitoba Harvest hemp parts to stores in all 50 states. This is the real bull case, and it's far more sophisticated than just legalization is coming. It's an infrastructure play. The company is essentially building the pipes for a market that doesn't fully exist yet, and funding it with a profitable parallel business. This is what the institutions who are buying are looking at. While retail investors feel institutions aren't on our side, Fintel data from the last quarter showed a net increase of over 15 million shares held by institutions. It's a small percentage of the total, to be sure, but it shows that some of the smart money is starting to understand and validate this diversification strategy. Zacks even upgraded the stock to a buy on October 15th, citing the improving earnings estimates. So, while retail is focused on the short squeeze mechanics, a different set of investors is quietly accumulating based on the long-term business model. Finally, we have to talk about the future outlook, which hinges on that one massive catalyst, the U.S. government. The dominant narrative for all of 2024 and 2025 has been the proposed rescheduling of cannabis from Schedule 1 to Schedule 3 of the Controlled Substances Act. The expectation among many new investors is that this is the magic button that legalizes cannabis. The reality is, well, it's not. Rescheduling to Schedule 3 would be a monumental step, but it does not make cannabis federally legal for recreational use. What it does do is acknowledge its medical use, and most importantly, it would finally eliminate the dreaded IRS tax code 280E. Right now, U.S.-based cannabis companies can't deduct normal business expenses, forcing them to pay crippling effective tax rates. Killing 280E would be a massive lifeline for the entire U.S. industry, making them instantly more profitable and attractive as acquisition targets. For Tilray, a Canadian company, the benefit is less direct. It doesn't immediately solve their problem of getting Canadian-grown cannabis into the U.S. However, it completely legitimizes the sector, opens the floodgates for institutional investment, and makes their U.S.-based MSO partners, who they have strategic agreements with, far more valuable. It's the first domino. The bigger prize is a future bill like the Safe Banking Act, which would give cannabis companies access to normal financial services, or full federal legalization, which allows interstate commerce. This is the political chess match that will dictate Tilray's ultimate fate. Comment below. Do you think we'll see meaningful U.S. federal cannabis reform in 2026, or is it all just political smoke? The risk is that this process drags on for years, forcing Tilray to rely solely on its beer and wellness brands to carry the load, potentially leading to more dilution and more investor fatigue. So as we head into the last week of October, Tilray sits at a fascinating crossroads. The expectation is that it's a beaten-down meme stock held by hopeful retail investors, manipulated by shorts, and waiting on a single political headline. The reality is that it's a complex, diversified consumer packaged goods company that just posted a surprise profit, validating a long-term U.S. infrastructure strategy. The stock's price at $1.49 reflects the market's total confusion, caught between the explosive short squeeze mechanics fueled by dark pool data and the much slower, more tangible story of a fundamental business turnaround. The fight between the old expectations and this new reality is what you're seeing in that 49 million share volume. The question for the next quarter is simple. Was that $1.5 million profit a true turning point? Or was it just a brief moment of hope before a return to the long, cold winter?